You use your credit card for daily expenses, and you pay off the balance in full exactly on the due date every single month. You are doing everything right, but when you check your credit score, it has actually gone down. To understand why this happens, we have to look at the math running quietly in the background. Specifically, an older, widely used legacy underwriting engine known as the FICO Score 8 algorithm. This chart breaks down exactly how that algorithm calculates your score. Notice that massive chunk right here. 30% of your entire credit score is dictated by a single metric called credit utilization. That is simply the ratio of the debt you currently owe compared to your total available credit limit. Because that one slice of the pie is so heavy, standard financial responsibility isn't enough to reach the highest credit tiers. If you don't understand how the algorithm calculates that utilization ratio, your responsible payments are being completely misread by the system. The problem comes down to a timing glitch. Your bank gives you a highly visible payment due date, but hidden in the fine print is a second, much more important deadline, the statement closing date. This dual timeline diagram shows the gap between those two dates. The FICO 8 algorithm doesn't track your daily habits. It takes a point-in-time snapshot of your account, and it always takes that picture on the earlier statement closing date. If you wait until your actual due date to pay your bill, the snapshot has already fired. It captures your regular monthly spending, locks it in as high revolving debt, and sends that data to the credit bureaus. Your score drops before your payment is even processed. You are playing exactly by the rules the bank gave you. But because of this hidden data collection schedule, the algorithm is punishing you for a debt you are about to pay off anyway. There is a way to beat this mechanic. It is a mathematical exploit known as the AZEO method, which stands for all zeros except one. The first step is to intercept the data. Instead of waiting for the due date, you pay down your credit card balances to exactly $0 2 or 3 days before the statement closing date. When the algorithm takes its snapshot, it captures a $0 balance. You have completely bypassed the high utilization penalty. But if your total reported utilization drops to absolute zero, you hit a different trap. This scale shows what happens. The algorithm triggers a zero utilization penalty, assuming you have stopped using credit entirely. To the machine, an inactive borrower is an unpredictable borrower. Paying every single account to zero stalls your score progression, meaning we need a slightly more precise configuration to keep the algorithm happy. This is where the except one part of the AZEO method comes into play. You pay all of your accounts down to zero, leaving a small, highly controlled balance on just a single credit card. This chart illustrates the target. Most accounts sit at zero, while one card reports a balance strictly between 1 and 9%. Once the statement closes and the snapshot is taken, you pay off that remaining balance on your due date, paying zero interest. You have created a perfect mathematical equilibrium. You satisfy the algorithm's demand for low overall debt, and you actively bypass the zero utilization penalty. The most powerful aspect of this metric is its amnesia. While late payments haunt your credit report for years, the utilization metric in these standard FICO models has absolutely no memory of past months. Because the algorithm only cares about the most recent snapshot, deploying the AZEO method can trigger an instant score jump of 10 to 40 points in a single 30-day reporting cycle. You don't need to do this every month. The ideal play is to execute this strategy roughly 30 to 60 days before a high-stakes credit application, like securing a mortgage or a premium auto loan, where every point dictates your interest rate. The AZEO method doesn't require you to spend less money, and it definitely doesn't require you to pay the bank any interest. It simply requires understanding the hidden rules of the machine and changing exactly when you make your payment.